She's my trading warrior sister. And hi, Lydia. I'm going to pass you the baton here, make you the presenter. Thank you so much for stepping into the void for me today.
Hey, Dale. Good morning.
Happy New Year, Lydia. Is it too late for me to wish you Happy New Year?
Absolutely not. We haven't spoken yet, so it's still valid.
All right. Well, Happy New Year, and I hope that you have a great 2018. And thank you so much for, on such short notice, coming in. And what a great time to have you. You know, Providence with what the pound's been doing, breaking out the new highs. Very interested in what your eyeballs are seeing here, my trading warrior sister. What's going on?
Thank you so much for having me. So yeah, let's start with cable. Cable was really interesting last week. We broke the 618 of this basically this Brexit down move. This is the Fibonacci from the Brexit vote to the lows at 1950 here on this chart. Right. Different brokers have a different low here, but if you take this fib, we cracked it last week, and today we've just had this breakout higher. And I've been watching this fib. I think many of us have been watching this fib as we've been around $1.35, which is right around this 50 line. And as we've had these kind of some lower lows since really breaking out in September, and we've been struggling to get a little bit higher here until probably around December, when we started to hear that Brexit was going to be softer. As we started getting news, right, that would lend to a softer Brexit, the pound has been powering higher. And really, I think last week it was when the Dutch and Spanish banks said they were in favor of a Brexit, a soft Brexit, or something along those lines. But this week we just we got a crack above this 38.39 with the high at 39.45. But this week we've continued on higher. So this is Lydia, the overall structure.
I know, Lydia, you and I and a lot of pros know the difference between a soft and a hard Brexit. But for those who don't, can you just give a quick synopsis of what would be a soft one and what would be a hard one?
Sure. So a hard Brexit would be like an exit from the EU across everything: business, financial lines, banking, trade. They would be completely separate countries. They wouldn't be in the European Union, the trading bloc, versus a soft Brexit where they separate, you know, geographically, maybe some trading agreements would still remain in place. So they would still benefit in some areas. Let's say in finance, like the banking system would still operate as an EU bloc, but all other industries would still be, you know, separate regions and therefore need separate agreements. So a soft Brexit means they have some benefits of being in the EU bloc without being under all the restrictions or requirements necessary to truly be a part of the EU.
Is part of it also immigration? And wasn't that part of the rationale for people opting to vote for a Brexit? Is they didn't want to be under EU's guidance for immigration into their country?
Right. So I think that anything that has to do with business, with business agreements not being severed, is a softer Brexit. I think the immigration issue is where I think an immigration issue is part of the Brexit, right? But anything where business and exports and industry is not being separated from the EU is where we've been starting to hear soft Brexit. So I think really a soft Brexit is where, you know, we want our industry, we want business to remain in the EU, but we want everything to be hard Brexit, like and immigration is a big one. When I say geographically, immigration.
Yeah. Interesting how that's echoing across the globe of people wanting to control.
Yeah, well, that's that wave of populism that we've been seeing since, since 2016, rolling really across the globe. Brexit was a big surprise. You know, our new president's election was a big surprise. President Trump's election was a big surprise. I think France was the one. Remember when France, Macron was elected and the euro skyrocketed because he wasn't a populist. He wasn't a populist candidate, and so the euro. That's when euro started to get some steam and starts to head towards 120, but against the dollar. But yeah,
okay. Yeah. So let's say someone just opened their an FX account, and they're looking at the pound here, and I know you mentor people, and say for example, I'm assuming you have with this breakout you have a bullish bias. How would you mentor somebody for looking for an entry into the pound on the long side here?
Great question. So their entries have been really tough. So looking at the daily chart, you know, clearly this has been the breakout and there hasn't been an entry here. But if we go into intraday chart, I've been, my standard, it's not even advice, my standard rule is to wait for the correction, and that there are times, particularly in the pound, where we're going to see these things grind higher. And this has been grinding higher for 2 weeks. We haven't seen a real correction. So you've seen I've been drawing this since 2 Fridays ago on January 10th, where we got the correction low here after this move. And I've just been drawing my fib higher, so I haven't even extended it for this week. There is no real entry until 137.94 or 138. And that's what I would tell newbies. I would say you wait for the correction. When you don't think that the pound is going to correct, the pound corrects, and then it corrects deeply. It will correct to like the 50% mark when you didn't think it was going to correct. And so that would be my advice for those who, you know, had a little bit more trading experience. If we take this back a bit, what I've been doing over the last couple of weeks, maybe the last several days, probably around Tuesday, Wednesday, Thursday, last week, you can draw these smaller fibs. So we had this move here to here. And if you zoom in on this, let's take this larger one out of the way. But if you take a smaller move, the move during the week, then you see that this dip here was actually a great correction and a great entry into 38.50. Actually opened the week this week with a gap up. I'll even come in on a 60-minute chart. So this was our gap up at the beginning of the week, and we had that gap fill, but we were really nicely in this fib. So we broke out. We didn't broke out. We gap filled. We filled the gap, stayed in the fibs, danced around here, and then broke out higher. And so what I teach my students, so we can now draw this fib here, and we're looking at today's dip now. Today's dip is right into the 50. Boom, or it was. You'd be chasing it a bit now if you got in now at 39.50, but it dipped early about 8 hours ago. It dipped into 139. That was a move higher too. So you can zoom in, and these ones are, so you can zoom in. I'll just say you can zoom in and take the intraday moves and put fibs on those to get a setup.
Okay. So to be a more active trader, experienced trader, you could drill down to shorter time frames and trade those fibs instead of the larger time frame fibs.
Yes, and I want to emphasize Dale's caveat there. The experienced traders should to drill in on these shorter time frames to do this, because as we know, like I just said before, the pound can correct, and it can correct hard. And so these can give you maybe a signal that's too fast or even too noisy. So I will give those disclaimers.
Okay, Lydia. So is there any major news or catalysts coming in the pound? I know we have ECB this week. You're looking for any kind of fundamental developments that could either generate acceleration or create a pullback here fundamentally?
No, so I'm not looking for anything that's not already on the calendar, right? So yeah, so I have, some people will try to say, well, what if they announce this? And we don't trade like that. We trade technicals, and we let fundamentals guide our direction. And so I think I would be surprised, and I think most of the market would be surprised to hear anything that would hint towards a hard Brexit at this point. I think that according to the weekly chart, I think we're on our way back to 150. And really pleased to see that the breakout actually took us to $1.40. This is a natural turnaround at $1.40. We should get this dip. I'd like to see a dip of this entire breakout move personally. I think that would be a great setup as we try to plow towards 150. I think that's ultimately where this pound is headed. It's basically a reversal of this down move.
Okay.
We're at the very beginnings of that now. So speaking of the ECB, looking into the euro here, the biggest, like I said, when we talked politics a bit, euro is able to get some steam, and then some other things help to keep the rally going in the euro. Against the pound, however, we've been struggling because the dollar has been weak. So the pound has been strong against the dollar, and the euro has been strong against the dollar, which has made it really difficult to trade the euro pound the last several weeks. So we've been dancing around 88.50, which is a major support resistance line for the pound, the euro pound in general. If you go back months on a monthly chart, you'll see that we really, it's a deciding point as to whether we break out when we're at these highs or at these levels, or if we break down. And I'm contending that the euro pound is turning bearish right now.
Okay.
I like that it has finally broken down out of this kind of congestion around 88.50, and that we've broken down. You see, I've been trying to see what it's going to do, if it's going to turn higher or lower. So I know I have a fib here, and I had been trying to play it higher because we, for several reasons, last week, trying to buy these bottoms at 88.50, just kept getting stopped out at break even. Every time we shot higher towards 88.50, I'd move my stop up, have some pips, and it would turn around on me. So I didn't get into this move today. Honestly, I've been so busy with the States. If you get into that later, but I have not. I've been watching markets. I haven't traded. I can admit that I've missed these moves, and so I am, as I'm talking to you, Dale, and talking to you all, I'm also looking for entries as well. So we look at the euro pound, this nice break of the 61.8 would say, okay, we're returning back to these 86 highs, 86 to 87 lows, a break below 87. And, we have this great level of support. It's nice zone of support at 87, right around 87.50. And, 87, between 87.60 and 87.40, but this is a zone of support that's been in place all of last quarter of last year, since September, since we dropped into these lows back in September, and we're here again. And so just like we looked at the pound, but this one is a little less noisier because we're on a 4-hour chart. We had that pop a couple hours ago that took us right into the fib, right? And so we're looking for entries to short this. But you need to be careful, be cognizant of this zone. We've seen the euro pound turn around several times. The ECB is this week. Draghi, could be that Draghi, talks the euro up or down. Who knows? The sentiment around monetary policies around the world from our major central banks is different. It's hawkish now, right? And so we have central bank governors who are trying to temper a hawkish attitude or hawkish sentiment, or not. Some of them have been blatantly hawkish, like the Bank of Canada was back in November, or whatever it was, October, where they hiked right after their July hike. And then this time around, they hiked again, but they try to temper it. So I think, we're seeing a lot of hawkishness, and it depends. You don't assume that that's an automatic bullish reaction in the currency. So like we saw last week, Bank of Canada raised rates, and we'll look at the pound CAD. It's just been powering higher on the back of Canadian dollar. Well, probably on the back of pound strength, but there's been some Canadian dollar weakness in there as well. So Right now, I wouldn't say you could short the euro pound here. I would say you're chasing it a bit. Your opportunity was more up into the fib at 87.92. But watch this area, especially as we head into the ECB release. It is very likely that the euro sells off into that release, which then makes you wonder if we rally. I would contend that if we do rally during the ECB press conference, that it would be met with a lot of offers. So
okay, sell strength on sell rallies.
I would sell rallies. I think the pound is still strong here against the euro.
Okay, thank you.
I know a lot of you look at the yen, so let me just jump to the yen before I go to the CAD. So on the weekly chart, I've just been watching this thing correct, and I've been saying it, and I think a lot of you are saying it here, is that 148 was that line where we saw resistance, and then we saw a bunch of support, and this thing has just taken off since they're really in these dips lower of 147. Was when I started to catch the wave higher and just kind of scale in, scale out, scale in, scale out, all the way up and through last week. So we're having this move, this correction, right? This correction of this down move. Still grinding higher, and so I do think this thing is headed towards 160. I don't think that's out of the question, especially now that as we hit 155. I think this thing can still move higher, but obviously nothing moves in a straight line. So we hit 155, and we got this immediate turnaround. So you can see this is my overall play. This is back in August, September. This bigger move here. This one is, let me move it for quickly. So what I just want to show is the 123 extensions up here at 156. I've been looking at 156 for months, for several months, waiting for this thing to hit 156. And I've just been scaling in and out, grabbing 100 pips here, 50 pips there, 150 where you can, right? I've just been grinding in and out. And I missed this dip last week. So that's probably the first time in months I hadn't been in the pound yen. This thing moving higher, and it got close to the target, right, at 155 is a pretty good move, especially when we came in at it from 147. So that's a stellar move, especially for the pound yen. Put this fib back on just to show again another illustration, like what do you do if you miss this move? We got this severe down move 2 weeks ago into 150, and then we've been back higher. So looking at it today, or looking at it for this week, we hit 155.40 and we dropped, boom, and we made a nice correction into 153. And, that basically this morning has been a morning of corrections. And so, like I say, I love to tell my students, the pound always corrects. I don't care how long it takes, it always corrects. So don't get impatient. Wait for the setup. Wait for the setup. The pound always corrects. So this thing is going to move, going to attempt to move higher. I don't tend to like to look at it this way. I think at the top of the week, let's go back to the daily chart where it's clean. I think at the top of the week, I would just like to see what is the fib on the whole move here. And so that's where I would be trying to look at. Maybe we get another stab lower into 153.40, but this looks like a pretty decent correction. Oops, let me get that fib off. But this looks like a pretty decent correction, and I only say this because this, if we look at this correction here, this up move here has obviously been reversed, and it's working on a complete reversal, but it's been reversed. And so when you have a wave or an uptrend that moves as a wave, where you're getting a move higher and a correction that respects the fibs, and you're just grinding that way, a move higher, a correction that respects the fibs. When you get a move higher and you get a violation in the fibs, you can expect a bit of a deeper correction. So that's why I would say, this looks like a great setup. If you're in, great, protect yourself with proper trade management. But know that this is this entire move is likely to correct, and is likely to correct after such a deep correction earlier this morning. So I would just be cognizant. I wouldn't chase this. If we're above 154, it's not a long I would be interested in.
So could it be as deep, take out 53 and go to where your moving averages are coming together around 152, which might be a fib of the whole move?
Yeah, I think 153 is a good area.
Okay.
Yeah,
Thank
because
you,
we're
Lydia.
looking at this whole thing. Yep, I would say 153. Is it through here? And yeah, your 61.8 is coming in here. So just all this area. If you're going into 152, you want to watch for a hold, especially of these lows, past lows. So we'll see. I think 153 is a great area because that's a former low. So 153.50 is another former high, another former high. So yes, Dale, to answer your question.
Okay.
I'd say so.
Nice. Okay.
So just mentioned the CAD and its grind higher. And I think this scenario is true for, if we look at the commodity dollars, just kind of looking at them as a commodity dollar block, unlike the other pound pairs where we've seen significant correction of that Brexit move, we haven't been seeing that against commodity dollars. And so, you know, we have strength in the commodity dollars, but they've been showing some weakness against the pound. So, you know, the pound has just been particularly strong for some of the fundamental reasons you've mentioned. So this one is just a great fib move. If we just look at this move over the last I guess the last quarter of last year. And again, it's been a grind. It hasn't been anything pretty. It looks pretty now, especially on the weekly chart, but it's been a grind. So this is that move. It's been a grind higher. And we're finally getting back to highs. You know, for me, a fib setup has to make new highs. We have support here, which are former highs and a kind of a former breakout area of support. So you want to watch 75.42 on the pound CAD. And really the target on this fib move this is a zoom in on the daily, but we saw it on the weekly, you know, 178.50 is where this thing is headed if we don't get resistance at 175. So that's where this is headed. You see, I've been trying to catch this, and it's just been choppy. It hasn't been as much of a grind as, say, the pound a dollar. But you know, if we just draw the initial move, you see that these corrections have really been short of the fib.
So I've interviewed you. Yeah, I've interviewed you. I don't know how many times, Lydia, but I noticed something today. I don't think I've ever asked you about it. I've seen it on a few charts. Mm-hmm. It looks like your objective work, your targets, you use a 1.23 a lot. Is that how did you come up with 1.23 as a fib extension for objectives? And am I reading it correctly that you use that for targeting moves to both the upside and downside?
Yes, I do use that extension, 123. I've been using it. So I mean, I just think I've just in the evolution of my work with fibs and looking to see, like, you know, where does this go? So after we correct, does this, you know, have a particular area that it goes to? And obviously it's not a science, right? Okay. I say that it heads towards that level. Okay. And so hold it past the new high. You can tend to feel like you can hold it. Obviously being aware of whatever support and resistance. But it's a level I've picked up from other traders, other older, more experienced traders. And then I've always heard Nick say that a step with me is like the 161.8 is where we could see you know, a trend end. So I've always just kind of looked at 161.8 for that particular reason, just to see if that is the case, you know, in any particular move. Not for truth or validity, but just to say, okay, if it gets to 161.8, let's see what happens. And I mean, I would contend that she's correct in that. So it's just something you look for. But I mean, admittedly, it's, you know, older and more experienced traders have pointed out these extensions, and I've just looked at them over time in my work and said, oh, this is a nice conservative target, as opposed to kind of guessing which new high you should take profits on, you know, after
Yeah, and if it isn't broken, don't fix it.
Yeah, you know.
Okay.
Exactly.
I was just curious, and great reason, and 1.618, the golden ratio. And I work with Nick. I didn't know that she said that, so I learned something new there too.
Yeah, I've heard her say it a couple of times. Yeah, so it's just something I've always just looked at or looked for. But yeah.
Can you just switch? I know they're probably pretty similar, but someone was asking about pound kiwi earlier.
Sure. Yes, yes.
Okay.
Pound kiwi. Yeah, so like I said, same look. I think that last time it was on, we were looking for it to hit to 98.50, which was the 61.8 line. It came right into that 61.8, and it's dropped since. I'm sure you guys have all talked about it. So I have been looking, like most of us, you know, just watching to see where we get in here. So just coming in on a 4-hour. This is in the same case as the CAD. It's just been, and the pound dollar or cable, it's just been grinding higher. And really, I've been several weeks ago, I think 2 weeks ago now, at the top of the month, I have been getting in against the support zone here, the loose support zone at between 89.62 and 89.31. But then shook out. You see all this choppiness. I would get shaken out, and then this thing's just been grinding higher. So I've not been in this trade because there has been no fib correction. So like in anything, I wait for the fib setup, and if I don't get it, then I can't trade it. But I think that this one is still bullish, even after this great correction, after hitting that high there. But it does have to prove itself, because right now it's really not taking off with pound strength as you would expect with all the pound strength that we're having in the market. I think all the Canadian dollar, Australian dollar, New Zealand dollar, they've all been very much not moving with the same amount of momentum as some of the other pound pairs have. So it's been tough to get long this one, just because of that reason. I think that the commodity dollars should be stronger than they've been exhibiting against the pound. We've seen some strength in some of the commodities as well. So I think it's tough to get long. I think I would have a hard time getting long if it broke this support level, even though it's in the fibs. Just because fundamentally there's not the fundamentals don't truly support weakness in the New Zealand dollar here in particular. But you know, you follow the trend. The trend is definitely to the upside, and this is where I would wait to get in short, probably even at the 38.2 with a tight stop. And you know, see if this can move higher. What you're really looking for, swing traders are really looking for this move to break above 98.50. Basically, that's your fib move.
Okay.
Yeah. Yeah.
Well, you did it again, Lydia. Another interview chocked full of targets and numbers and fibs. Great presentation. Why don't you take the time now to show people how they could get a hold of you and what your business models are, and you don't have to talk about the state. I know how regulated.
So my blog is, thanks Dale, thank you so much. So the blog is faithmindfx.com. But I talk about a lot of different things, as long as it's market related, right? And so a lot of, so I have several students now. They've come to me through my course. You can find more information at Here Learn with Lydia. And if you're interested in asset management or investment advice along your greater portfolio, not just Forex, you can find out more information about the RIA with Invest with Lydia. So I just, you know, direct everyone here. Check out my latest posts on the cryptos. I've actually had several DMs asking me to post more charts in this asset or in this particular Forex, right? So I've definitely will look to do so. This year I'll post a couple crypto charts. I've been loving watching.
Have you personally done any crypto trades? Have you tried it?
Of course, Dale. I'm a trader.
All right. Okay. I haven't. All right. All right. So you're expanding into this new asset class. So
yeah, I mean, the technical analysis here has just been a beaut. It's just pure buying and selling. We don't have algo, we don't have futures, we don't have any, like, it's just so pure right now. that if you're a technical analyst, I think how can you not look at cryptocurrencies and looking at the price action at any of these
Great
coins?
argument. Yeah, so don't let the volatility scare you, because technically it's still a classic, raw, pure market.
Absolutely. Absolutely. I mean, if the volatility scares you, just stay away. There's other asset classes to trade. But I mean, yeah, just as a technical analyst, a student of FIB, like it's gorgeous. It's just been very, very pure.
I mean, you know, double ARP has come out and endorsed FX trading because crypto's so wild. So they're approving FX trading for senior citizens now.
To keep people out of cryptos. That's funny.
Thank you so much, Lydia, for being here with us today. Everyone, you could follow Lydia on Twitter at FaithMight. Check out her website, FaithMightFX. And really, I know I said Happy New Year. I hope it is a great year for you and every endeavor and everyone who you touch and bless with your knowledge, Lydia. Thank you for your time today.
Dale, thank you so much. I really appreciate it. Happy New Year to you. Great 2018. Cheers to 2018. And I look forward to seeing you in the streams and being back on with you all again soon.
Okay, Lydia. Thank you very much, my trading warrior sister, Lydia Idem Finkley.
Thank
all right,
you.
Faith, let's turn around Tuesday. I'll see everyone tomorrow. Good hunting the rest of the day. And remember, most of all, don't just count your pips, count your blessings. And working with you and the team at FA is definitely a blessing in my life. Thank you again, Lydia. Our friendship is as well. Adios.